This is the story about how I lost 99% of my investment. Yep, basically all of it. Yeah, look, I'm not even kidding here. It's pretty bad. And what not to do if you're investing, and some lessons I've learned as well. Losing money in the stock market is like the rite of passage for every single investor out there. It doesn't matter how good you think you are, mistakes will be made. It's important to understand that and not make those same mistakes again, and understand why you made them in the first place. Always try and adapt and understand that the market doesn't give a toss about you and your feelings. Always try and remember that and keep your emotions out of it. Now, I bought shares in this woeful company back in 2020 when there was still a lot of hype, and after the March crash that we saw, things for some reason bounced back. The ASX was killing it. The S&P was murdering it. Things were up in the middle of a global pandemic, and it didn't make any sense at all. And that is when this company actually IPO'd. Now, at the time, the market cap of this company was $358 million on just day one of trading, over $250 million, and right now, the market cap is about $10.5 million. Now, if you haven't figured it out yet, this company is ASX LBY or LAY. Yep. Now, the reason why I bought it was honestly because of the hype, and therein lies the very first mistake of this whole journey, is the fact that I bought into hyped up areas of the market with little to no research. My thesis was simple, and it went something like, buy now, pay later seems to be the new way to pay. Now, if this trend continues, we're going to see giants like Afterpay be like a rising tide that will also lift other buy now, pay later companies up, with Afterpay being a North Star, a company to look up to for those newer players. Instead, we had the opposite. Afterpay survived and thrived while the competition died. It's okay to look at the hot sectors of the market, but you can't involve your emotions, and you have to look at it logically. Back then, buy now, pay later was super hyped up due to the pandemic, and I didn't research this company as I normally would. It was all about the quick gain because literally everything was going up. This was the hot new IPO, which I should have watched out for. In reality, if I researched the stock, I would have realized that this company was literally burning cash. Sure, it was growing quite quickly, but the losses were increasing as well. Now, let me make this clear. Loss-making businesses aren't the worst thing in the world. A lot of great companies started off as loss-making enterprises, but the reason why these companies were still so valuable was because the potential that they had moving forward, their growth story, and the markets that they were trying to target. So a loss-making business isn't always a bad thing. But the thing is, not every single company out there that is loss-making can actually fulfill its potential and reach the mission that it's trying to reach. And a very good investor is able to differentiate between looking at which company that's loss-making is going to do well and which company that's loss-making is not going to do well. The fact of the matter is, a lot of great companies that are making lots and lots of losses are very, very good at marketing themselves and basically selling you the dream as, it's their job, right? Because the more dreams they can sell, the more investors can jump on board, and obviously the stock price can reflect that. But oftentimes that is not the case, and as an investor, you have to be very careful with this. An example I'll give you guys is Amazon. This company literally lost billions and billions of dollars before it became profitable. So there you go. Now this company is worth almost as much as the GDP of Australia at over $1 trillion. So basically differentiating between great businesses and not so great businesses, that is the challenge. And when you're in a market where literally everything is going up, this is the challenge. It is very, very hard to do, especially in the buy now, pay later sector, because basically everything was going up. Now, after having turned almost $5,000 into $92, what is the aftermath, and what do I personally do differently? Well, firstly, I'm not going to sell this stock because there is literally no point. I've held on for this long, and losing another $90, $92 isn't really going to make much of a difference after having lost, $4,500 on paper. Although it hurts to see this stock every time I check it, there's really not much to gain from actually doing the act of selling it, because remember, you only lose money once you sell. The maximum I can lose on this stock at this point in time is $92, but on the flip side, in theory, stocks don't really have an upper ceiling. So although the share price is quite depressed, and personally I don't really have faith in this company, it may well go up one day, and I may as well hold it to see if it does. There is a chance, a very small chance, that I might recover my money, so there's that as well. So I'm just going to keep on holding it. Secondly, I've realized that yes, these mistakes are super costly, but over the long run, after years and years of proper investing, these losses are going to represent such a small portion of your portfolio that you won't even think about it. The gains from the other assets you hold are going to be far greater, and they will basically counteract all these losses. So I'm taking a long-term approach to it, and I realized that if I keep on investing properly, it should be fine in the long run. If I was in a similar situation 4 years ago when I first started investing, I would say differently. Look, sometimes you got to take the L, and it is what it is. Thirdly, I've learned not to invest in hyped up IPOs or hot sectors because oftentimes their prices are super inflated. Fourthly, check the economic environment. In 2020, there was a flood of new money into the system through COVID relief and government programs, schemes and support and all that sort of stuff. And the year of 2020, the actual conditions in the economy were absolutely not normal, which obviously inflated the prices of all these assets, especially in the stock market. And now we're seeing with the rates going up, these companies are now falling very, very hard, especially companies that were loss-making. They have taken the biggest hit because investors are just not willing to put money into an enterprise that's not making money, no matter how good their growth story could be. So after all this, I feel like I've grown as an investor. And if you enjoyed this video, you can check out my other video, which talks about my investing journey right here, how I got started. There's different strategies I took, which basically shows that there is no set path to take as an investor. There's all different things that you can do. So go check it out. And guys, thank you for being here. I'll see you in the next one. Bye now. Now, after having lost